What this relisting does gives us an opportunity to redefine the role we want to play. And that to me is really exciting.
Our investment makes a difference to the African continent. We're able to get a good return for our clients and at the same time have a positive impact in the economies in which we operate.
More and more clients are saying to just have growth at any expense is not enough. People are getting passionate about the environment and about governance.
Each time a client trusts you with money, that money is full of dreams. So that particular client wants to pay for their son's education, their daughter's education, their dream vacation, their car. So there's a dream attached to that. And when we do a great job, we enable dreams to come true.
So we incorporate environmental, social and governance issues into everything we do, both in the listed environment and the unlisted environment. We invest directly in infrastructure, in housing, in schools, in agriculture. We have a number of very independent boutiques, and they are not distracted by anything else apart from managing the client's money and delivering that performance to the client.
What I love about the boutique model is it's so simple yet so powerful because it's all about alignment. And that's alignment between the client, the business, and the people who work in the business.
They really do get the best of both worlds. They get to invest with boutique managers, and on the other hand, they also benefit from the excellent support service that we give our clients to our enabling functions, and that's quite important.
One of the biggest single drivers of returns is asset allocation, and that's our core strength. We've been doing this for more than 20 years and have got a fantastic track record of beating the market through successfully allocating capital where the returns are.
We've got some exciting products, particularly those that incorporate ESG into our investment decision making more explicitly. Within the smart beta area, our managed alpha capability built a very strong track record. Our incorporation of artificial intelligence into our decision making.
Our three principles are very straightforward. Number one, we operate as independent boutiques within our business. Number two, we align ourselves completely with the client outcome. Number three, we relentlessly pursue investment excellence in everything we do, with one driving focus, investing for a future that matters for all our clients. And bringing this all together into a successful outcome is what we are here for as an asset manager.
We want to help them achieve their goals, and we're doing that by trying to achieve long-term, sustainable returns for our clients.
And within the South African, maybe broadly African context, we can make a difference in people's lives.
That's the journey that I'd love to be part of, and that's the enthusiasm that I think many of us bring to the task.
Good morning. Bushfires raging, a virus that affects the economy and livelihoods of millions of people, a president that cannot be successfully impeached, a drone strike on a general, armies and police officers in the streets of our cities, and a man dying on live TV, resulting in civil unrest. This sounds like a Hollywood blockbuster. But yet, it is 2020, a year where we saw dark clouds on the global horizons. But are there a silver lining to all of this, or is everything just doom and gloom? Now, this is what we're going to discuss today at our 2020 Investment Insights. Welcome. Our first speaker for the morning is our Director of Investments, Hywel, and he's going to shed light on a watershed year, talking about the economy, talking about the virus, and then talking about some trends that are emerging. Afterwards, Siboniso Khumalo, the head of our equity capability, will talk about the last 54 years. Have we seen these cliffs before? Is everything lost, or is there a silver lining over this dark cloud? Thereafter, John Duncan, the head of responsible investment, and Khonsi Tsatsi, head of retail distribution, will talk about, do you want to invest where the smart money is going? Is responsible investing relevant to you and your client? And should this be part of their portfolio? Thereafter, we'll have a 10-minute leg stretch, and Daphne Botha, Portfolio Manager at Future Growth, will chat to us about income funds and what has happened in the first half of the year influencing this. Our last speaker of the day is Erin Bates, freelance investigative journalist that is going to talk about inquiring minds, the SA Commission of Inquiry, and especially with a focus on state capture. We hope that you will enjoy the morning with us. You will be entitled to CPD points, 1.5 of those, and at the closing we'll talk about how you can collect this. You will see that we've got a platform for you to engage with. The agenda's there, the speakers' bios. You can actually meet and ask a question to any speaker. We will have the facility to enable live questions to all the speakers as well. So feel free to ask any questions during the course of the presentation that you might want. We will also have a little prize post the event for the person that has been most interactive during the conference. We hope that you enjoy this morning with us. And now I want to hand over to Hal George.
Hi everyone, and thank you Elize for the kind introduction. We've got 20 minutes together. I'm going to spend 5 minutes on markets right now and the virus, and 15 minutes talking about the effect of the virus on all our lives and markets and economies for the next decade. That's why this moment is a watershed moment. So let's get going. Firstly, markets. The US market peaked at a market cap of around $35 trillion, promptly lost $10 trillion of value, and recovered precipitously over the coming months to where we are today, which is almost close to new highs. So what's been driving that? Firstly, the virus. Take a look at this chart. Daily cases now are around 200,000 per day. That's up from about 100,000 per day only a couple of months ago. So we're seeing this second wave in the virus coming through, particularly in the States, in Latin America, and in parts of Asia. And that is troublesome for the markets. The lockdown, which was necessary, has led, on the flip side, to governments having to support economies in rather startling fashion. The 2008 financial crisis, or the global financial crisis, the GFC, the amount of government and central bank stimulus is in the small blue dot. So Germany was 3.5% of GDP. The large blue circles are the current stimulus into economies. So a huge stimulus coming in. And that's having a pronounced effect on the level of debt which governments are bearing, and the stimulus effect into economies themselves to support them to the other side of the crisis we're in. I'll come back to the effect of this government debt in a moment, but if you take a look at this chart, global debt of the non-financial sector is now 220% of GDP globally. If you put that in trillions of dollars, it's $250 trillion of debt globally. It's an extraordinary number, and it's only going up, and that's going to be a problem in due course. We'll come back onto that. But markets are approaching new highs. How can that possibly be the case? Well, part of it is the fact that the stimulus I've mentioned, and that stimulus tends to end up in places like equity markets as the government puts money into the real economy. And what we're finding, in the States in particular, is that we're getting a lot of retail investment. So retail day traders are pouring into the market and buying shares like airlines, like other forms of cyclical companies, like automobile companies. And you can see from this chart how much those retail type shares have exploded in terms of what retail investors are buying as day traders. And so that's having a big effect in terms of pushing the market up. And we're getting people like the now famous Dave Portnoy, who's a day trader. He made some money selling his gambling business. Just read this. I bought the stock dollar ship simply because I consider myself the king of the cruises and wanted all ship stocks. I literally couldn't afford not to own those letters. It's up 45% today. P.S. I've got no clue what it actually is. So there's a lot of, could I say, dumb money going into the market right now. And that's a little bit of a worry in terms of the near-term market dynamics. And those retail trades are going through what we call high-frequency traders. So their effect is being amplified in terms of its effect on the market. And that, again, is a bit of a problem. In the meantime, in the near term, we've got an election in November. And Trump is in a little bit of trouble. And you can see this is actually the betting odds. And look to betting odds, not opinion polls. when you're looking at how a vote might go. And the blue line is Joe Biden as the Democrat, the red line is President Trump. And as an incumbent president, when an economy is in recession, it's very rare you get re-elected, particularly when you don't handle the virus as well as you might have done. And you can see that Biden is 60% likely to get into the White House. And that means that Trump will be vitriolic in terms of his ability to identify a common enemy, and that common enemy is China. So that'll create noise in the system. At a time when global stocks, this is the price-earnings ratio, global stocks are relatively expensive. So in the near term, we've got some issues in terms of some froth in the market. And at a time when this photograph is actually in London, in Oxford Street, when they reopened shops in London, this is the queue to get into the Nike store. I don't see a lot of social distancing going on there. So virus cases are likely to go up. So in the near term, we've got a big recovery in the market. We've got a little bit of froth in the market, near term. So it may come back. In the longer term, I'm sure it'll be fine. But what's really happening in my last 15 minutes with you together is let's look at what this virus really means in terms of the next 10 years, because that's what we need to focus on. And the virus is having a couple of effects. Number one, it is accelerating existing trends in technology, in healthcare, in sustainability, and it's also introducing new trends. So let's look at these in a little bit of detail. 5 investment trends for the next decade. Technology, healthcare, renewables, space, I'll come back onto that one, and inflation. Let's talk about technology and healthcare first. And this is all about exponential growth over the next decade. This was happening anyway, but it's been accelerated, given we're all working from home and e-commerce is exploding and all those things we know about. Exponential growth looks like this. This is internet traffic. And when a chart goes vertical like this, that means it's growing exponentially. And exponential growth in technology is driven by 2 things. Number one is Moore's law. So Gordon Moore, the founder of Intel, said that computing power would double every 18 to 24 months. That was 65 years ago. It's been true ever since, and actually before that. When you see a chart like this, which goes up at 45 degrees left to right, that's a logarithmic scale, which takes exponential growth and makes it into a flat line. So we've had Moore's law in place in terms of computing power for the last 80 or 90 years. And you put that together with the compounding effect of compounding a higher number onto a still higher number, and you get exponential growth. If you walk 30 meters, 1 meter each time, you'll end up 30 meters away. If you take 30 exponential steps, so each step is double the one before, you'll end up going 26 times around the world. So exponential growth is very hard for us to get a grasp on as humans, because we tend to be linear. And it has this kind of type of effect in healthcare. This is UK life expectancy back to 1841. So people would live to about 40 years old, 150 years ago. Today, life expectancy in the UK is approximately 80 and increasing. And it's forecast that by around 2030, we will reach the escape velocity for life expectancy. That means that by living an extra year, the average life expectancy increases by more than a year. Ergo, you can live forever. So that'll have all kinds of implications for us and for healthcare. What can artificial intelligence do today? Let's take a check on this. Well, it can definitely read better than humans, and it can recognize faces better than humans. So our ability to recognize faces is around 95% accurate. A computer will be 98%. In terms of skin diseases, deep learning outperformed 136 out of 157 dermatologists. So computer's better than human already. In the courtroom, this is in Texas, judges now use AI to rule on prisoners, whether they're guilty or innocent. The computer proves to be better than a judge in terms of the accuracy of its output. And if you happen to be in a coma in China, you may find the machine taking the view for you, as opposed to the doctor. Luckily, it's the way around that if the doctor decides to switch your machine off, the machine can intervene and kind of save you if it feels your odds of success are bigger than the doctor does. Take these glasses. This was back in, about 10 years ago now. Anyone remember these kind of Google glasses? Augmented reality. where you could see information at the side of your eye. They were laughed at. Now they're back. And they're being used in China by the police. And the police in China are able to, through their sunglasses, they have loaded the criminal records and facial recognition of people they need to arrest. And by scanning the crowd, they can spot these people. And they arrested around 136 criminals on one weekend in China. And China, of course, have taken this a step further. So you now have a social credit score in large parts of China, which is your normal financial credit score we're all used to. It's your social media score in terms of how you conduct yourself online and who you conduct it with. And it's how you behave in public, because facial recognition is at the point where they can recognize what your behavior is in public. If you're jaywalking or smoking in the wrong place, you get docked. This is real. If your social credit score in China is too low, and so far 13 million people that is the case, you are not allowed to board a train or board an aeroplane to leave your home city. You're literally denied movement. So these kind of technology trends can be bad as well as good. Amazon Alexa, a big part of many people's lives, particularly in the US. And this will have profound effects on the way we think about our lives, about economies, about our businesses. The biggest selling battery in America used to be the Energizer Max, AAA 8. When you're ordering batteries on your Alexa, do you say, Alexa, order me Energizer Max Power Max AAA 8? No. You say, Alexa, order me batteries. And guess what arrives? Amazon batteries. Because Amazon own Alexa. Just think about when you're buying insurance. Do you say, Alexa, buy me Old Mutual insurance? No. You say, buy me insurance. Or buy me the cheapest insurance. We've got to think about these trends. So market share of Amazon in home improvement, athletic shoes, skincare, batteries, golf. 92% branded Amazon now in e-commerce in the States. It's really profound, and that's coming our way. Another trend, XR, augmented reality, where you have glasses, virtual reality of the big glasses and you're immersed in a different world, and XR, which is cross reality. Now, cross reality is important. Tim Cook, XR would replace all your devices by 2021. That's next year. Here's where you look through the screen instead of at your phone. So you have augmentation, be it contact lenses or glasses, or finally an implant in your eye. And all the information is there for you at all times. It's an extraordinary thing, and it's coming our way. So hands-free machine vision, X-ray vision in medical procedures. That's happening already. And we'll move into a full sensory environment, which will allow holoportation, where your loved ones or business colleagues or a combination of the two can be in the same room as you, even though they're thousands of miles away. This technology is coming, and it's being accelerated partly because we're all working from home. We're all remote now. And you want to be part of these trends for the next decade. Let's talk about autonomous vehicles. This is a chart which shows Waymo, which is the Google self-driving car, and it drove 11,000 miles per human intervention in 2018, up sixfold in 3 years. So autonomous vehicles are already much, much safer than us driving. And they're also more efficient. This is a chart which shows your Uber ride. Just look at the figure on the bottom. 50% of your Uber is your driver salary. This is why Uber are investing in autonomous vehicles, because they can ditch the driver, and it'll be half the cost to them. This is already happening. This is Phoenix, Arizona. This is the Waymo vehicle. It's a self-driving car. You call it on your phone. It turns up. There's no driver. You get in. You get taken to where you want to go. These things are happening. So technology, healthcare. Let's talk about renewables. Renewables, worldwide wind power capacity up fivefold in 10 years. Again, this is exponential growth. Okay? Solar capacity up 30 times in 10 years globally. So a huge investment into wind power and solar power, which means that the prices of wind, price comes down 20-fold, or solar, the price comes down 350-fold, from $77 to 22 cents. That means that the price of renewable energy is now cheaper than fossil fuels without any subsidies. That's the first time that's ever happened. You're going to see an explosion in renewables. And guess what? In South Africa, we're fantastically well placed for this because we have a lot of sun and a lot of wind and a lot of coastline. We're in phenomenal shape. We should really take advantage of that. And by the way, as Old Mutual, we're standing ready to supply, thanks to our clients, capital into those kinds of projects. Let's take a breath and talk about space before I get on to my final topic. This is an arcane chart from NASA. It shows you the gravitational well of the solar system. It tells you that sitting on Earth, the force of gravity is 22 times what it is on the moon. We have one of the biggest gravitational pulls in the solar system, which means it's very difficult to take off from Earth. So what are Elon Musk and those doing in SpaceX? They are launching rockets and heading to the moon, and the Chinese landed on the moon last year, by the way, because the moon contains all the resources we need to construct structures in space. We will use the iron ore, etc., all those elements you need, oxygen, silicon, all the metals, to construct these kinds of things. This is science fiction, but it's happening. Asteroids as well are full of these minerals. We will live in space, and it's the plan A. It's not the plan B, to escape Earth. The plan A is to construct space cities and live in them. It's science fiction. In 5 years' time, it may be a little bit more normal to talk about. But the time to get onto the investment trend is when it feels a little bit exotic, as opposed to when it's normal. Down to earth for the final one. Inflation. I've talked about the stimulus going into economies, which is kind of saving us through the lockdown period. Enormous money being spent into the economy. And it's going straight into the real economy, as opposed to via the banks. And this chart is important. This is money supply growth. And you can see how it's spiked on the right-hand side. So M1 and M2, both measures of money supply, are growing at 40% and 80% respectively. That tends to lead to inflation. The other thing that tends to lead to inflation is the fact that we're shortening our supply chains. So deglobalization is happening, partly through Trump and partly through the virus. That's accelerating. People want more local supply. That means fewer cheap goods being imported from China and Vietnam and Ethiopia. You've got to make it yourself now. It'll be more expensive, more inflation. And guess what? Governments actually would want some inflation, because what this chart shows is the amount of debt to GDP we've got in governments. It's kind of back to my earlier chart. Governments are bearing north of 100% of GDP, quite commonly now in developed economies. And that's a problem. And how do you service that debt, and how do you pay it back? Well, the easiest way to do it is to deflate it in real terms, which means inflation. More inflation in the system means the real cost of your real value of your debt over time comes down. So governments will want inflation into the system. And central banks will probably be obliging in terms of purchasing that government debt, which we're seeing already in the States, by the way. The Federal Reserve is purchasing most of the government issuance of debt, and that means that we'll have inflation further down the line. Not immediately, because economic activity is too weak, but further down the line, we will get some inflation. So for the next decade, you want to be wary of that. So, penultimate slide. This is a watershed year, because it's accelerating trends and creating new trends for the next decade. These are the 5 I've highlighted. I'm sure there are more. But you want exposure to these trends. And what we've tried to do is show you how to do that. This is my final slide. Just take a look at this. These are the ETFs, exchange-traded funds. Those are exactly what it says on the tin. It's a fund, so lots of counters in it, lots of shares in it, and it's traded on an exchange. So you can buy it on the stock market. So ETFs are the way to play these kinds of trends. So in technology, you can buy, instead of buying Tesla, which has gone absolutely crazy, you probably wouldn't want to buy it now, you can buy an iShares, electric vehicles and driving technology ETF. Electric vehicles and driving technology. That'll be full of autonomous vehicle manufacturers, battery manufacturers, the backup supply chain. Tesla's about 4% of that ETF. So you get the diversification and the trend. So you can buy these things in technology. You can buy them in healthcare, healthcare innovation, iShares ETF, biotechnology from Global X, renewables in the center there, global water, even space. It's a little early for space, But SpaceX is valued at about $40 billion right now, but it's still private. When that comes to the market, it'll be interesting. And inflation. You might want to kind of protect yourself from inflation for the next decade in gold, in real assets like infrastructure and timber, in agri, maybe even in cryptocurrencies. So to conclude, 2020, watershed year. It really has changed the world. This virus has changed the world. It took something to change the world. And it's changed it in terms of accelerating existing trends and creating new ones. We've talked about 5 of them today. And as investors, you really want exposure to those, not as all your portfolio, but as a side basket of your portfolio, partly out of interest, because very interesting what's happening in technology and elsewhere, and partly to protect your wealth over long periods of time. And we're talking about the next decade and more, be it space, be it renewables, be it healthcare, be it technology, be it inflation. And at Old Mutual, we're looking at putting something together in terms of a fund, perhaps, which can capture all those trends and invest in these things for you. Again, as an interesting, whatever it is, 5, 10% of your portfolio, where you can capture these trends and benefit from them for the whole of the next decade, having lived through and hopefully survived 2020 as a true watershed year. Thank you.